just start with you, Remko, if we can. Just brief introductions of yourself and the company, just so that everybody gets an idea on what perspective you're coming from.
My name is Remko van Hijum. I am the head of tax of Bouwinvest Real Estate Investors. We are an investor in real estate. We have a portfolio of about 13 billion euro real estate in a few Dutch funds and in areas of the world, or the pension fund for the construction workers in the Netherlands.
Great, thanks very much, Remko. Dave.
Yes, thank you, Richard. My name is Dave Reubzaet. I'm a tax director at PwC in the Netherlands. And I'm specialized indeed in tax and ESG, helping investors, asset managers, but also companies in developing tax and ESG and what it is all about. So that's this panel session. Thank you.
Great, thanks very much. Richard.
Thank you, Richard. It's a pleasure to be here. I'm a tax partner in the real estate practice of PwC in Amsterdam, providing tax services to real estate investors and asset managers and developers. And also more and more, because of all the ESG developments, we are working with clients to align their ESG goals with their tax strategies and their tax policies.
Dave, let's start with you. Just looking at ESG and tax strategy, I guess what are the key trends and particularly how they're influencing one another, I guess?
I think there's a lot to say about tax and the world of ESG. But let's start saying by a simple or fundamental statement that tax is actually in the E and the S and in the G. So we talked already a lot today about environmental taxes, carbon taxes. So that's really in the E, the carbon taxes, but also the incentives to obtain there. If you look at tax in the S, in social, then it's really about, let's say, paying your fair share, the contribution that you pay to society, to the sustainable development goals, but also about remuneration policies, equal pay, flexible workforce. So tax has an important role to play also in the S. And last but not least, in the G of governance, well, you talk about governance in general, tax is part of that. And then you talk about topics like, for example, tax strategy, tone at the top, but also risk and control of tax through the value chain. And last but not least, also about transparency reporting and assurance. So it is really important to see there and to state that tax is an important element in the E and S and the G. So that's one. The other thing is that you really see here that the worlds of tax and sustainability are, let's say, merging or coming together. And that means that it is very important for various parties, so investors, companies, asset managers, advisors, to also take into account, let's say, the non-tax regulations that have an impact on tax. And if you then look at the various soft and hard regulations, you can think about, let's say, the OECD guidelines for responsible business conduct. Also there in a specific chapter is written on responsible tax. Of course, you have the sustainable development goals. A lot of companies embrace those goals, but the UN and the Global Reporting Initiative have actually developed KPIs for business to take. And a couple of examples there are of KPIs are pay a fair share of tax, be transparent about tax, develop a policy or a strategy and test impact. And very important also, do not avoid tax. So those are KPIs. On the other hand, you see extensive guidance from the UN PRI. It's not a mandatory thing, but a lot of companies, investors are actually signatory to the UN PRI. And they have developed guidance on what it actually means to responsibly invest from a tax angle. So also taking that guidance into account is important. And then two other elements are the EU Sustainable Finance Package. I heard it already in a lot of panel discussions coming up. Sometimes I think that we tend to forget tax in the very broad package, but tax is actually already in there. So It's part of the technical standards, and I won't bother you with too many details, but tax is already part of the E and the S and the G. You should, for example, also monitor the tax compliance of investee companies. You should be able to report on blacklisted jurisdictions. You should be able to report on violations of the OECD guidelines that I just mentioned. So there are a lot of direct and indirect reference made to tax. And I think a very important element to make here is, or point to make here, is that at this time, the taxonomy really focuses still on the E of ESG, and an expansion will come for the S and the G. And I think it was already mentioned that one of the elements in the S and the G is that they will focus on, for example, tax transparency, but also on non-aggressive tax planning. So I think there is still a lot to come and important to take into account also for tax. Last but not least, you also have the various corporate governance codes in many territories, codes of conduct, and of course for the real estate sector, you can see here the latest from INREF, who just released their tax code of conduct. So, and I will just pause for a second, but the last remark I have to make is that then you will actually see that it is important to develop a tax strategy and take into account in that strategy sustainability aspects, so the ESG elements that I just mentioned, and engage with stakeholders on their expectations to make sure that you integrate those expectations in your strategy, test the impact on the portfolio, but also on the internal organization from a governance perspective, and then make sure that you can actually report back to your stakeholders and to the investors. So that's, I think, important steps to take and remarks to make. And I will just pause for a second to hand over also to Richard and Remko.
I was just going to come back quickly to Remko before I come to you, Richard, if I can, which is just how do you implement these things, Remko? I mean, just in terms of your journey there at Bouwinvest, you know, there's a lot of complexity in this we can already see. So how have you gone about implementing it? And I suppose, where are you in that process, Remko?
Now, for us, it all started with the investment process. Before we had a policy, we as a tax department, we had to assess every investment on tax aspects, and we did our own due diligence. But sometimes we had discussions internally on the tax elements, which might be sensitive from a reputational perspective, which might be contrary to the international trends as regards tax avoidance. Based on these discussions, I thought this shouldn't be the discussion between individuals within a company, but it should be something of the board, and this should be company policy. So in 2018, I started the process of drafting a policy. We took a year for that. We started in January, literally, by sitting together as a tax team. We started with our beliefs, the mission of our company, which is that we want to create real value for life. This is what we always say, and this means for us that we want to be a company which is not only creating value for in terms of money, but also value for society. And this is something which we do by in various ways, by investing in green buildings, etc., but also tax. So we had various discussions internally. Then Dave Reubzaet came in as an advisor and helping us in the process. At that time, also we realized that it's not only about investment criteria, investment principles, but also about risk management and how to proceed data and how to include IT in your strategy. So this became also a part of our strategy. Then in summer, I think in summer, we finalized the first draft. Then we had a meeting with our management board, and we explained everything and the trends in tax and the whole area. And that was a starting point for a number of internal discussions with various teams within the company. So communication department, but also the investment teams. legal departments, and so on, to gain alignment within the company for our policy. And then at the end of the year, we came back and we included all their comments in the new draft of the policy, and then we got back to the management board. And at the end of the year, this policy was adopted by the management board and became effective as from the beginning of 2019. And as from that date, we have to we adjust the policy annually. So we have a critical look at the policy. Is it still in accordance with the latest legislation, case law? We look at the transactions we did last year and how they fit into the policy. Should we adopt the policy, adjust the policy a little bit or not? Because at the end of the day, what you tell in your policy should also be reflected in your behavior. If that's not the case, that's not possible, of course. Where are we now? We are now in the process of improving our reporting on how we perform the policy in practice, and to show that to our stakeholders. And that's also quite a challenge. But maybe we come back to that later. But that's where we are now in that process.
Yeah, I know it would be really interesting to come back on that part about the engagement with stakeholders, especially Remko, I think is important. Richard, just coming to you. I mean, obviously we've heard from Dave there about some of the kind of key areas, and from Remko about an example of an investment company that's implemented a number of these things, and it would appear that it's an ongoing process. So how does this work when we're looking towards, I guess, a number of other companies also doing that, and working in lots of different tax regimes and different areas? I mean, I suppose, is it important for companies to work together on some of these standards, or how do you see this developing, Richard, especially in the light of more kind of regulation coming down the tracks?
I think we're now in a very interesting time, because we see the front runners or the leaders in this area, where Bouwinvest is really ahead of a lot of other players in the market. And together with Bouwinvest, there are some other institutional investors in the Netherlands, but also some Scandinavian investors that are quite advanced in making clear what their desires are from an ESG perspective, what their values are, and how they would also want to implement that in their tax strategies. But where it becomes actually somewhat challenging, well, it's already quite a process to do this. As Remko was explaining, it can take a year before you really go from, okay, I wanna implement this, into making that strategic policy. But once you have it, you also want to use it, and you want to use it on your real estate investments. So what we see happening in the market a lot is that asset managers that are helping the investors that we just discussed about to make those investments, and they manage their portfolios, are being asked to obey or follow these particular strategies. And the problem is, if you're an asset manager and you have multiple investors, you will actually have multiple versions of what an investor thinks is important. An investor thinks you should what standard you should follow, and that's where it gets really hard, because with so many different people working on this and creating a policy, there will also be different views. And what we see in due diligence is that asset managers are struggling a little bit to somehow keep all their investors happy and follow exactly what they answer to the question of the investor to promise that they will follow a strategy.
Thanks, Richard. And Dave, do you see things like technology playing a bigger role in these areas? What's your sense of how these rollouts are actually going to happen?
In essence, ESG and, for example, the EU Sustainable Finance Pact, that's also a lot about, let's say, being transparent and transparent reporting back to society and stakeholders. And the transparency reporting, of course, asks for a lot of information. And if you then equal information with data, you need to be able to, let's say, manage data in the broader sense. So from capturing data, storing, analyzing, blending, well, and actually reporting the data internally and externally. And for that, of course, you need, let's say, an IT infrastructure or technology to do that. And that, I think, will become more and more important. Also, if you look or take a closer look at the various regulations that ask for a lot of metrics or data points to report on. So I think to anticipate that, and I really liked also the comment that Christiana made in one of the earlier panel sessions, that it's not only about, let's say, looking at the current regulations and compliance with that, but you can more or less already see where things are heading to also to take soft codes or regulations into account. I think that's really important to anticipate that, and then anticipate, well, the correct management of data.
Okay, good. And Remko, I wanted to pick up your point there around the different stakeholders. I mean, one of the interesting things when I was talking to heads of ESG around panels looking at tax was that they felt that was more for somebody who focused on tax. And it'd be interesting just to say, do you see these two elements coming together a little bit more? Is that an internal discussion in terms of stakeholders? And also just pick up, I suppose, the pension fund side of that, Remko, as well, just because that has a different series of stakeholders.
I think what we see is that pension funds, in my experience, are becoming more and more risk averse, maybe also driven by EU regulations, and also by from society. Last week there are a couple of good examples as well in the Netherlands, not particularly to tax, but you see that the public is looking very good at the behavior of pension funds and where they invest their money in, and tax is also more and more becoming a part of it. In that respect, reputational risk is in particular getting more and more important for pension funds. What I see is that they are asking us, what is your view on that, and how should we can we adopt your view on sustainable tax and on ESG, and make it our policy, or should we draft our own policy? But you see a trend. I see a trend that risk and ESG and tax is getting more and more important for pension funds. At the other hand, they have also the struggle that the kind of dilemma you call it. At the one hand, ESG and reputational risks are getting more important, but at the other hand, they also have the pressure to realize good returns for the insured people, and behave as a prudent and a good manager of the money which is entrusted to them. So that can sometimes be a dilemma, and it's quite a challenge for pension funds as well
to be able to resolve. That's interesting. Yeah. And Richard and David, you will probably see this more, but do you see, broadly speaking, the tax side of it being driven by the ESG team within companies, or more by the tax team within companies? And do you expect that to come slightly more together to create, a single approach?
I think it's exactly the point is already in your question. And what we see a lot, and that also came out of the other panel discussions, is that the ESG officers that many companies now have are really focused on the real estate, and they're if you would discuss taxes with them, they think, oh, that's quite abstract and that's hard to grasp. Well, actually, you often see the in-house tax function or the CFO side of the equation, not really used to apply ESG values and more like strategic values you want to carry out directly into their tax strategy. A lot of the tax strategies are more about being compliant, ticking the right boxes, being on time, and that's it. So I think there's quite a bridge still to be made, because we do see that the leadership of a lot of companies are actually very interested to take on ESG in their finance world and also in their tax department or the tax side of the company. But it's it goes beyond following the tax rules and being compliant. It's actually that additional step of saying, where are we in society? What do we think is the correct way we should behave? If there is an advantage which I could grab and it's actually legally allowed to get that advantage, should I first stop and hold and see whether actually this is something that is supposed to be for me, or am I now making advantage of a mistake or a problem in the legislation? So that element is sometimes falls a little bit in between both, and I think it's really interesting, and that's part of the process of getting having these discussions and basically flushing it out, is to see, okay, most companies do follow all these regulations that we've just described, which Dave started with, but how do they actually use them and implement them throughout their company? And there is still work to do, I think.
Yeah, and that's interesting, Dave, because you've obviously got a lot of focus, as Remko pointed out, from an investment point of view, certainly for a pension fund, but also as an asset manager or an investment manager, you've got to deliver the maximum returns that you can, or at least the returns that you've set out. So you've got an interesting dilemma there between the sustainability side, and the requirement really for you to meet your tax, objectives there, meet all of those, balanced against the normal company structure, which was about minimizing tax. So is that a solvable puzzle, Dave?
Yes, it's solvable. So, and yes, you see a shift from, let's say, seeing tax purely as a cost to a shift to also tax as seeing as a contribution to society. And that's also partly driven by the COVID pandemic, where we see the need for funding for governments, etc. But also driven by, as I mentioned, the Sustainable Development Goals, and that actually taxes are needed to fund sustainable growth. So I think it's a puzzle that we can make. There's a lot of emphasis when you talk about sustainable tax or tax ESG. There is a lot of emphasis on, let's say, doing non-aggressive tax planning, which is a very important element. And I think that can be done. The other thing is that it is also a lot about governance, putting robust governance in place. So control. And the last piece is to be very transparent about tax to the wider public. And that's also something new. So it's not only about, let's say, the planning piece and the cost versus contribution piece, but also about governance and being transparent on how do you do tax. And the last element, so the transparency piece, may sound rather simple for the non-tax person, but I think in the tax world, transparency is not always a given. So we see a big shift there, that we are becoming rapid or at light speed more transparent, which I think my personal view is that it's a good thing.
Okay, good. And Remko, in terms of the kind of fund managers, what do you expect to see from fund managers? If we look at I suppose in the near future, but also looking slightly further ahead.
For pension funds, as investors for the long term, they think that at least the pension funds we know, they think that long-term investments with a sustainable tax profile, they in the long term they have a better yield and a better return for them. And for fund managers, I would hope that they create structures which are more tailored to the needs of pension funds. And I won't go into the technical details, but that might be very. We might be happy if they will do that in the longer term. At the same time, I think pension funds will also be open for a slightly lower return on their investments if those investments are ESG proof, also from a tax perspective. So maybe that's also something which they can take into consideration. And another thing is that they should be prepared for an increased demand for transparency and reporting on how they manage their funds from a risk perspective. Do they have their own policies? INREF policy might be helpful in that respect, but also for as regards of reporting of data and transparency, I expect a shift in the future and increased demand from fund managers in that respect. Yeah.
Do we see the real estate industry changing because of this? Will we see different tax structures? How do you see it actually influencing it? Maybe let's start with you, Richard.
I definitely think this is a change that is going to be embraced by first the investors that we already talked about. They are leading the way, but I think soon this will be a common thing, and so therefore, I think it's also good if everybody would start speaking the same language when we are referring to sustainable tax or ESG and tax. And therefore, maybe a helpful tool could be the INREF Tax Code of Conduct that has just been published. And the aim of that was to create a standard for the real estate fund business. So I think what we will be seeing is that a lot of asset managers and investors will like to refer to that when they're going through due diligence processes to see whether the investor is aligned with the asset manager in terms of tax code of conduct. So my that's my view, is that will be an important role to create a standard, and that will also hopefully in the end will get rid of a lot of noise on this point and more consensus on how to approach structures and how to deal with this important topic.
Okay, great. Remko.
Yeah, I see that in the coming years, legislation will be changing, will continue to be changing as well, and therefore I'm happy that we have a policy right now, and I'm sure we have to adjust it on a regular basis in the future as well. So I think this never stops, and I would say to other parties, just start. I can recommend.
Great, thanks very much, Remko. Dave.
Yeah, I also agree with the others. Change will come in let's say other types of structuring, putting in place robust governance, but also the extensive transparency reporting. So I think it will come, and I totally agree also with Remko here. Simply start. So tax, reach out to sustainability, and sustainability, please reach out to tax to start the discussion and be part of the change.
Thank you, everybody. Really interesting insights there, I think, around this part of the market.